Okay. Good morning, everyone. Thank you so much for coming in to our next Business Success webinar. Today's presentation will be on access to capital and is brought to you by our friends at JP Morgan Chase today. So really thankful for today's presentation. Really briefly, just wanted to mention we'll be answering questions in the chat, so make sure you drop in all your questions. We reserve some time at the end, so make sure to stick around for that. We're recording this, so if you missed any second of it, you could always refer back to it in our post-event email that we'll send out, in which will include our survey and the recording for today. And then make sure to include your contact information in the chat as a nice little way to network amongst ourselves. But with that, I'll go ahead and stop sharing my screen, and I'll have today's presenter, Sherry, go ahead and introduce herself and take it away from here. Thank you so much.
Thank you. Good morning, everybody. My name is Sherry Shoemaker. I'm a business relationship manager at JP Morgan Chase. I've been with the company for about 10 years. So what I do is specialize in helping small business customers, mostly from about $1 million in revenue upwards to about 15 million. So I have a portfolio of clients that I work with and help them with all their banking needs, from their deposit accounts to lending, which we're mostly going to be talking about today, as well as all their cash management and treasury needs, basically payables and receivables, so how to deal with all the money coming in and out. So today wanted to talk about access to capital, so kind of an overview of what I'm going to talk about, what we call the 5 C's of credit, going to go over that, as well as establishing credit for the first time, then kind of talk about the nuts and bolts of your credit report and scores, and then talk about lending solutions, so like what we offer at the bank in terms of lending and the different kinds. Also, what you can do as a borrower to affect a faster loan decision. And then at the end, we'll just go into some questions. So first of all, talking about the importance of good credit. Credit is vital to a business. It's like what oxygen is to us as a people, and it's a lifeline that you can't survive without. So from a strategic perspective, credit is far more than an essential element just to grow your business and hedge against financial emergencies, which in 2021, we've seen that take place. I used to always kind of remind customers about 2008 and remember what that was like. And now 2020 is the new 2008 and the financial crisis and what impact that has on your business and how significant that is. So it represents your company's ability to borrow. So this resonates strongly with lenders, vendors, and with your business partners. So they need the security of knowing your business is creditworthy with the capacity to pay them on time in exchange for their willingness and our willingness to lend to you and help you conduct business. So reviewing your company's credit history helps these potential stakeholders determine whether you're a good risk or not. Along with a strong credit track record comes the confidence that might allow you to borrow at more attractive rates. So I'll talk about the products that we have at the bank, and obviously there's other alternatives out there, but when you have to use those alternatives, it tends to cost you a little bit more money. And, there are instances like when businesses are new that, traditional products at the bank might not fit. So we'll talk about some other options there, but at the end goal is to get you to be a bank customer and have lending through the bank. So even if you're new or haven't really established credit yet, the goal is to get you there down the road and to be strategic about that. So reviewing your credit history helps us determine whether you're a good risk. And along with that comes with your like I said, ability to borrow at more attractive rates, more favorable terms, and secure a loan maybe used down the road without a personal guarantee. So your ability to borrow is a strategic asset. So using it enables the acquisition of working capital to run your business today, and then also in the future while helping you maximize cash flow, which, like I said, credit is the oxygen, cash flow is just as important. Like that's what your business revolves around. So it also helps you capitalize on emerging opportunities. I sit with clients all the time that talk about, I have this huge purchase order. So I have the potential to make all this money, but I need the capital to buy the inventory to pay my employees. And so that's always a catch there. How do you make money without spending money? Also credit helps you deal with unexpected surprises without tying up your cash on hand. And I'm sure I'll probably refer to it several times, but 2020 was an unexpected emergency. You want access to money when something like that happens. And one of the catches is, and a lot of times you sit with customers who 2020 happened and I need money and what can I do? We're going to go back to looking at your financials, and when we see your revenue start to decline, that's a red flag to the bank. So like I said, I try to remind people about 28 because you have conversations with customers and business is great. We've got money in the bank, the orders are coming in, things are good. And I say to them, you should really establish a line of credit. And to them, I don't need it. Like I said, everything's good. That's really the time you want to establish. When business looks good, your financials are good, that's when the bank is willing to lend to you. So you may not need it, but think of it as a strategic play for the unexpected. Because when times are tough and things don't look good, the bank's less likely to lend to you. So, and another thing you want to do with credit is it prevents you from using your personal assets to pay off debt. So really getting into that separation of your personal and business assets, which, when you're new in business, they tend to be tied pretty closely together. And then as you meet with your CPA and talk, you realize the importance of separating the business from the personal. So, good credit is so vital. Absence of that in any economic environment would put downward pressure on organizations to compete, to grow, to prosper. So really prepare well, be strategic, perform your financial due diligence. And here, I'll tell you a few things to consider along the way. How is the current economy impacting your business? And as the economy changes, for better, right now for worse, how is your business impacted and how are you prepared to address it? So ask yourself these things, partner with a CPA, be strategic. It's so important to have like someone like me, like your banker as a partner that knows your business, your CPA to know your business, not just someone that does your taxes once a year for you and helps you save money. I have these conversations with people, oh, my CPA is great. They think he's great because they don't pay a lot of taxes. Like, you and Donald Trump not paying a lot of taxes. That doesn't look well on the bank, because if you're writing everything off and you're showing a loss year after year on your tax returns, when you present that to the bank, it looks like you're losing money. Why are we going to invest in you and take on that risk when the business is losing money? So make sure you're having that conversation with your CPA, where you want to see your business in 5 years. What's the plan for growth? These are super important conversations to have instead of just kind of going day by day or looking at your year when you do your taxes in hindsight. You want to always be forward thinking with your business. So other things to ask yourself and be prepared to answer, what changes have you made to the operating model in the last 12 months? There's a few businesses out there that haven't had to pivot this year, right? And business as usual is changed. How you did things at the beginning of the year are probably different than right now. And, you've had to make adjustments for businesses to survive. Restaurants are going from in-person to online ordering to takeout. Just changes all across the board. And then also, how do you plan to make it in the next 12 months, right? What are you going to do? Also, what are the current trends for the industry you operate in? Again, 2020 has changed that, even for us at the bank. We have industries that we like, that are safe, that not a lot of risk involved, and industries that are a little bit more risky to the bank, right? So even this year, that's changed. I look at a loan I was doing right when COVID hit in March for an acquisition of a dental practice. At the bank, we love professionals. We love doctors, lawyers, dentists. Well, put the loan on hold, understandable. He didn't want to buy the practice. But when you come back 6 months later, do we love dentists as much as we used to? What happened to dentists? They shut down. Nobody wanted to go. So you have to kind of know what you're working with, and then what is your operating model with that dentist. Now that we're back looking at the loan again, when he was shut down, his employees were still coming to work and they were making appointments. So when, you know, the shutdown was over and he could have clients back in his chair, he already had the appointment set. Where you look at some other dentists during the shutdown, they didn't, you know, employees weren't at work, they were shut down, they reopened, and what happened? There were no appointments on the books. They needed to start making appointments and get prepared. So just going back to being strategic and looking at your operating model and how you can change it with everything that's changing around you. Also, you know, who are your competitors, your customers, your suppliers? And then also from an ownership and management perspective, what is your competitive advantage? Why do customers do business with you? You know, how will you pay a loan back, and why should a lender extend credit to you? So just as important as it is to partner with a CPA, be strategic with them, you should also develop a relationship with the bank. I can't, you know, if you look at this year, and I don't know how many of you involved with trying to get a PPP loan, I'll tell you, every person that I've ever worked with in the last 10 years was calling my cell phone. You want to have someone when things come up that you have a relationship with, that knows your business. And also it's important when you get to the point of submitting credit applications and applying for loans, you know, that goes to an underwriter and they just look at your financials. They don't know you as a person. They don't know anything about your business besides what your relationship with the banker is, what we tell them. There's an area where we just write all about your business. So when I have a loan and I know it's important, I'm at that customer's business. I want a tour of your business. I want to see how you operate. I want to know you. I want to know why you're in this business, why you're passionate about it, what's your history with it, because I'm going to be the person telling your story to the underwriter. I'm going to tell them why we should do this. I always bring my manager with me as well. If I know a deal is not going to be easy, I want his buy-in. I want him to meet you. I want him to meet your employees. I want him to have gone to your business and know everything about you, because when it comes time to an underwriter to making a decision, it's not always a yes, but do we go back and we still fight for it? Absolutely. So you want as many people on your side fighting for your business and telling that underwriter why this deal makes sense. So that's really important. So kind of going into what we do look for as lenders. You know, without any exception, every business that applies for credit undergoes a due diligence review. That's linked to the credit review and approval criteria of any lender. So while it could vary by bank to bank and institution, the specific criteria we use to determine whether your business is a good credit risk is what we call the 5 C's of credit. So first one, character. So lenders want a full faith commitment that the owners and the majority owners of the company are willing to stand behind the business. So your business history, your management expertise, your personal credit history and business work, all that'll be evaluated. Cash flow, you know, does your business have enough money coming in on an annual basis to pay back the loan? Varies from different lenders but with us, you know, rule of thumb, we want to see $1.25 of income for every dollar of debt you have. So we want to know that you have the ability to service the debt, and then it's also not going to put you under, because at the end of the day, we want to extend credit, but we also want your business to succeed. So we don't want to put anyone in a position where they're strapped. We want to know that there's enough room there that you can comfortably pay back the loan. So that's important. Collateral is also important. So what is your business willing to pledge to secure the loan? Business assets are stuff like equipment, real estate, accounts receivable, inventory, that sort of stuff. So again, on a ratio, we like a dollar for dollar. So for every dollar of collateral, a dollar we'd lend to you. And that's, you know, at the end of the day, we want to make sure you've got some skin in the game, right? It's not just us taking the risk. And we want to know, unfortunately, if something happened, that there was something there to pay back the loan if unfortunately you couldn't, which obviously that's the worst case scenario for the bank. We never want to have to take it. It's not profitable for us to take someone's inventory and try to sell that off to come clean on a loan. So moving forward, business credit solutions, best practices. So kind of the type of lending we offer at the bank that's out there. So whether you're thinking about a commercial loan for long-term capital growth, business line of credit to meet short-term cash flow needs, or even a business credit card program for the first time, which is a great option for newer businesses. I mean, typically when we extend lending, we like to look at 2 years tax returns, minimum 1 year. So if you're a brand new business, it's hard to establish a line of credit. Right now, post-COVID, at Chase, we're not even doing startup lending at this time. And it was something we did before, but again, it's really tough. So there's other options out there to kind of get you started. So we offer a bunch of different products so to help you access the resources to kind of meet your business needs. So first off, our business term loans helps you purchase capital goods, equipment, pay off debt, any significant purchase that you want to pay for over time. They have fixed and variable options, fixed monthly payments, flexible terms, that kind of thing. Another real popular product is a business line of credit, which, takes advantage of opportunities as they arise. It's like a big credit card, ways to access funds and leverage maybe trade discounts, build your inventory, use for operating capital. So again, that's a revolving line of credit. So you use it when you choose and are only making payments on it when you advance on it. So one big difference between like the term loan and line of credit, lines of credit are meant to be revolved short term. So, the crunch in the month to help with cash flow. It's not meant to use all of it and then try to like pay it down. That's more, use a term loan for that. Line of credit is going to be to use and pay and revolve. So like I mentioned, if you're a new business, credit cards are a great option. At Chase, we use the Ink credit cards. There's lots of great credit cards out there. You can look them up. But options for 0% for the first 12 months. So if you are a new business and have some big purchases and can't get lending, then that's a great option. You've got 12 months to pay it off without any interest. You can earn rewards for cash back. Used to say travel, that was exciting. Now that's not really an option. But it's a really great way to start establishing credit for your business as well. So lots of people use their personal credit cards for their business debt. It's not a great practice. So when you establish business credit, we're going to use your personal credit, because we don't have anything to go off for the business if it's new, to look at your credit history. So you guarantee it personally, but it's going to start reporting to the business. So it'll report to that tax ID number, and then it starts establishing credit for the business. So then when you get to that point down the road where you're ready for something more with tax returns and that, you've already established that little bit of credit in the business with using the card. And it's important that it reports separately from your personal, because if you're going to refinance your house or do anything on the personal side, you don't want that debt showing up. That Ink credit card or whatever business credit card debt you use is not going to show up on your personal credit. The only time it would show up is it wasn't paid. So anything derogatory like that, it would show up, but it's established and it's completely separate from your personal credit, which is really important. Another type of lending that we do, and everyone's heard about this year, is SBA loans, the Small Business Administration. So we're a preferred lender with them. All our SBA lending is in-house. There's some great advantages to the SBA. They kind of help with real estate financing, equipment, debt refinancing, all that sort of stuff. And they mitigate some shortfalls. So say you don't necessarily qualify for traditional, what we call conventional lending with us at Chase, because maybe there's not enough collateral there, shortfall in collateral, or there's a your debt service coverage that we talked about is a little off. That's when the SBA can come in and they get the bank a little bit more comfortable. So what happens is the bank does 50% of the loan, 40% of the loan is done through the SBA, and then the 10% is from you, and that's a guarantee fee. So that money's pooled together. And what that money really is from the SBA is it kind of just goes into a big pool. So if for whatever reason there's an SBA backed loan that went into default, that 10% covers all those loans. So it's kind of the buy-in there. Right now, SBA lending is really attractive in real estate right now. Typically at the bank on real estate financing, it's a 20% down. So what's happened post-COVID, we've moved to a 30% down on real estate financing. So it's still something we do, but you got to put a big chunk of money down, which is hard to come up with, 30%. So if you use SBA financing for real estate, they're still at a 10% down. So that's real attractive right now. They give you the option of just putting 10% down on real estate versus the conventional that's at 30 right now, which I don't know how long that'll last for. It's anyone's guess what's going on with COVID, but the bank has just pulled back, and that's where we're at right now. So they have some great options as well. 25-year fixed terms. I think the last SBA real estate loan I looked at last week, it's a blended rate where you're going to take the bank's rate and the SBA's rate, but we're right around 3% on that. So as much as going on right now, it's a great time to buy. And if you're in that position where you're renting office space and want to buy, it's a great time to move forward on that. The other type of financing we do is equipment financing. So machinery, sometimes vehicles, technology, all that sort of stuff. So that's a great option. There's also a lot of tax benefits with that. So that's a great option as well too. So things that you can do to affect faster loan decisions. So the timeliness of loan decisions is predicated on thoroughness of the information you provide to the lender. So a lot of times you get the question, well, how long is it going to take? And, we're always hesitant to give that answer because a lot of it is dependent on you. When you get your documents to us and what you supply to us moves things along. So some things that, we can get them done in a few days and perhaps even sooner, based on the size of your loan request. But, you need to come prepared. And I just want you to know the things that a lender will ask for if you do want to move forward on lending. So if you're thinking about a business loan, a line of credit, you can accelerate it by, providing a complete loan package. So as a lender, I would send you a list. This is what we need to get you to a decision. And with us, we're a cash flow lender. I don't give you rates and that sort of thing until the underwriter looks at it, right? They're going to look at the whole picture, and obviously the better financial picture you have, the better the rate and the better the terms we can offer. But it's really, we need to look at it first and then make a decision and tell you what we can do. So the more accurate the information you submit, the faster a loan can evaluate your credit worthiness, process the request. And like I said, it kind of goes back to making sure the banker knows you and knows your story. Like I said, the underwriters don't know you and don't know about you, but they know financials. So they spend all day looking at your tax returns, your income statement, all that sort of stuff. They're going to notice things. Nothing's going to get by them, right? This is what they do day in and day out. So if there are issues or if something happened, address that with your lender up front. Let them know, in 2018, you might see this. Explain it though. So we want to up front tell them, this is what happened at this time. The owner was sick. Something happened with a supplier. Like, tell the story, because it's just better to say up front any issues, because they're going to catch it in your financials and notice it. And that it's better to talk through it up front and be forward about it. And it just looks better with the lender if you're a little upfront about any financial situations. So make sure you have your financials ready, partner with your bookkeeper, your CPA. If you do QuickBooks, make sure you have all that information so that you can answer questions and structure the request to meet the needs of your business. Updated balance sheets and income statements, allow us to do a thorough cash flow analysis. So, and also like the personal guarantee, be prepared to sign a personal guarantee, expect to provide your personal financials as well. So we're going to take, we're going to take a look at the personal, and a lot of times, stuff flows through from the business to the personal. It is important to, again, when you meet with your CPA, talk to him about retained earnings and leaving money in the business and stuff with distributions. The personal guarantee, we want to know that you believe in your business. If you want us to extend credit to you, we want your buy-in. You personally, are going to guarantee it. And then also retained earnings is something to talk about with your CPA as well. If you're taking everything out of the business and flowing it through to your personal, it doesn't look good to us. We want to see that you're keeping money in the business and you're investing in it. A little bit more on the business credit versus the personal credit. Business owners struggle with the notion of using their personal credit to run their business instead of taking those steps to establish a relationship with the bank or other lenders. It can be problematic. It increases your exposure to risk, and should the business even fail on tough times. So right now in this environment, lenders are moving away from using personal credit when evaluating the financial health of the business. So the personal credit is not always considered an accurate reflection of your business behavior. So that's, really important to make sure you have that business credit established. So we use scoring tools that combine both those metrics and kind of determine your business risk. So some people are sole proprietors, they use personal credit, but it's just really important to just start separating it. And also, like, talking about the character of the business. One thing that Chase has started doing is also looking at your deposits. So if your business accounts, your personal accounts, making sure you're managing those, making sure you aren't overdrawing those accounts. I had a loan I had to decline, cash flowed, credit score was great, but the customer had a constant problem of overdrawing his business account and his personal account. So if you're not managing those, that's a red flag to the bank. And in the customer's defense, this is why I'm coming to you for a line of credit, because I have these cash flow issues. So it made perfect sense why he needed it, but just know that they look at these things, So when you're going to get to that point where you apply for it, make sure you've managed your personal account, your business accounts, you have overdraft protection, you're making sure, because it just speaks to the character of you as a customer that you're running really lean, and it's a red flag. So that's something to keep in mind. So I'm sure most of you have done this, and when you're planning on establishing business credit for the first time, make sure you've incorporated or formed a LLC to ensure, your business is a clear separate entity. Make sure you have your tax ID number, a checking account in the name of the business, all that stuff. Again, like I said, establish a relationship at the bank. Start to get to know somebody there. Like I said, I have a book of about 80 clients, but at Chase Branch Bank, we also have small business specialists that are branch based that help some of the smaller clients. It's just important to establish that relationship. And, when you are applying, the quality of the information you provide is directly proportional to your ability to obtain loans and other, benefits. So take the time to, use QuickBooks, establish good reporting for your business. A little bit about credit reports, scores. I'm sure most of you are pretty familiar, but credit reports and scores are essential to your business credit history and reveal a record of how you use money. So the credit reports, centralize a bunch of data into one area, your purchase history, your credit history collected by the credit bureaus. All your credit cards and loans are going to report on there. Your payment patterns, whether you pay your bills on time. Another thing some customers don't know or aren't aware, but things that we look at are minimum payments. So if you have a credit card and it's maxed out and you think, well, I'm making my payments on time, they look at the fact that you're only paying the minimum and it doesn't reflect well. So making sure that you are paying down those bills and more than just minimum paying them. So credit report always shows how much you owe as well. So outside of the report, your score, right? The credit report number, it's a big deal. The higher the number, the better your credit history. The lower the rates that banks are going to offer you, the more credit they're willing to extend to you. So, they're based on metrics used by the bureaus. They range from typically like 300 to 850. Factored in are the number of loans you have, the number of credit cards you have, how much you owe and to who, how long, length of credit history. That's really important too. Another thing that's important that not everyone knows about is your credit usage. And like I said, maxed out credit card and minimum pay, those negatively affect your score. And so does the usage. Like ideally, your credit usage should be at about 30%. If you had a credit card with a $20,000 limit, you want to keep the usage around 6,000. And I know like you need it for cash flow, use it and pay it off. Again, that's important. But when we see credit cards, with really high usage, that also doesn't look well either. So things to keep in mind there, because it looks like you're using all the credit that's extended to you, and that can be a red flag. So, and I know you guys know there's 3 main bureaus: Experian, TransUnion, Equifax, and they collect and maintain the information that makes up your credit history. And if you use it to build your company, they use it to build your company's credit report. So that includes your existing credit accounts, your payment history from financial institutions, credit card companies, banks, mortgages, other lenders. And they don't share that information with each other. And that's kind of why you see some differences in your scores and stuff like that. But that's what helps determine, your company's credit worthiness, along with all those other factors we talked about earlier. So basically, businesses depend on credit for the funding of necessary to meet a wide range of short-term and long-term operational and growth objectives. So once you've established your credit worthiness, remember to monitor it, evaluate it, protect your credit standing just as you would protect any other business or personal asset. So, your ability to borrow, along with the adoption around cash management practices, managing your receivables and your payables, it's critical for the success in, your business. So I wanted to thank you guys for your time today, and then see if there were any questions that I could answer for you guys.
Thank you, Sherry. This was really informative, by the way. So we'll open it up here to any questions. Feel free to also unmute yourself as well. We'll allow that here. Or raise your hand and I could unmute you as well. But in the meantime, Sherry, do you have any a little basic recap of what we just talked about? Any last minute pointers, or maybe some what you think may happen as we approach 2021?
It's a good question. I know this year's been crazy. Like even with us, we got to a point where we basically shut down lending outside of PPP. I think at Chase, we did over 240,000 PPP loans. So we had months where we didn't even offer any lending to clients. So as of June, we've gotten kind of back in the game, and it's tough. Credit's always tough. And with Chase, we're very conservative, right? So like I said, there's other lenders out there that aren't traditional that will do factoring loans. Like, hey, I've got this PO, they'll lend to stuff like that. That stuff, we don't do. But ideally, like I said, you just want to get in the position where you're just forward thinking about your business, that you're proactive, that you're putting an effort into making sure your financials look good, like just how important that relationship is with the person who does your taxes. If you want to grow as a business, you've just got to think, as much as people don't want to pay a lot of money in taxes or show they're a loss, that might be a short-term solution for you right now, but how is that helping your business down the road? You really just want to be forward thinking and make sure that you have that conversation with your CPA. Say, I want to be, help me make my business bankable. Help me look in such a way that people are going to lend to me while you manage all those other things, like your credit and stuff like that. So I mean, and unfortunately, it is the catch that, like I said at the beginning, when times are tough, it's really hard to get that lending. So if you're having good business and you're growing, or if you're lucky enough to be in an industry that maybe is thriving during COVID, take advantage of that, get something in place. Because like I said, you never know. We didn't see 2008 coming. We didn't see 2020. So have that peace of mind and security. A line of credit, maybe an annual fee you have to pay, but it's not costing you anything if you don't use it. But it's that safety net there that can be the, make or break your business if, God forbid, you had to shut down for a few months or something like that came up.
Great.
It looks like I looked at the chat. Someone asked what collateral the business will need to get a line of credit. For us, I mean, we look at mainly three things, and it's the inventory, the accounts receivable, and your equipment. So those are the three things, we look at. And just because you've got accounts receivable of 200,000, we don't give you $200,000 worth of credit of collateral. It's kind of a complex formula. We want to make sure there's not, anything over 90 days. We're not going to count that. If there's a high concentration and your accounts receivable are 50% from one vendor, that's kind of a red flag too. Because what if something, that vendor stopped doing business with you? There's a thing. So we really take about 40% of your accounts receivable. And it is tough because there are some businesses that don't have a lot of collateral. And like I mentioned before, SBA can come into play there. They mitigate some of those shortfalls. They have a line of credit product called SBA Express, and that goes up to $350,000. So that's some options there. So just because you don't have a lot of collateral, it doesn't mean, you can't apply for a loan of credit or they're not going to give it to you. I'm trying to see if there were any other questions in there. I think that's the only question I saw in there.
Great. I don't see any other questions on my end, but again, feel free to unmute yourself and ask Sheree directly. We still have some time here to answer any questions. But I did have a question. Maybe you might have answered this already, but do you anticipate, I know they're saying that interest rates are at an all-time low, for different kinds of, markets, but do you anticipate them, fluctuating or going even, increasing or decreasing?
We don't. Most of our stuff is tied to the 10-year treasury, but low rates, and we don't see that changing anytime soon. So that's what's great right now. If you are in a position for lending for real estate, they're low, and we plan on them staying low, but we don't plan on any big fluctuations anytime soon. So
great.
And then someone did have a loans to build a new project, land and building. They're complex. I'm working on a surgery, a doctor's surgery center build out right now, and they're a lot of work, and there's a lot involved in them. But it's something we do, and we do every day, and we kind of just hold your hand through the process a little bit and, walk you through, dealing with the construction. You need the architect, the project manager. There's a lot of people involved, but we've got a lot, with us at Chase, it's a great team. And so we have someone who specializes in the construction team, and they'll walk you through, taking draws for your project and how that works. And there's a credit coordinator and a whole bunch of stuff to walk you through it. But it's a lot, it's a big undertaking for us at the bank. There's a lot involved on our end, but then also as the borrower. I always recommend getting a construction team, like a project manager, that kind of walks you through all the ins and outs, depending if you're doing ground up or remodeling a place or something like that. But the lending part of that is real similar to everything else. Most of the time, if it's a building, we do a loan for the building, and then we do another loan for about 12 months for the construction, where you just take draws as you pay your contractors and stuff like that. And then at the end, it gets turned out into all, and then it's just all one loan. So that part of it is actually not that complicated. The lending, it's just doing the project itself that can be, it can be a lot of work.
Great.
And then do I think lending will become tougher in the next 6 months because of the economy? I think, you know, like I said, we already kind of made it tougher. We changed our advance rates where on conventional, where it was 20% down, now it's 30. We've actually kind of made it a little bit easier. Like when I said we rolled lending back out in June, we were requiring projections. Any project under 5 million, we were requiring the borrowers to submit projections, balance sheet and income state for the rest of 2020, for 2021, which most people, you know, it's hard enough to do your income statement and your balance sheet and that sort of stuff. So when we're going to borrowers and saying, I need projections, most of them were like, I have no idea to do that. And us at the bank, you know, I wasn't even allowed to send someone a template. Like, here's a template to do a balance sheet projection. We weren't even allowed to do it. So we did get away from that in the last month. So it's a little bit back to normal there. We're not back to normal yet on down payments. There's an extra 10% on everything. I think I was talking about the dentist acquisition practice earlier. We have a great medical program where in March, I was doing that 100% financing, no money down. So even that, you know, medical program we have now, it's 10% down. So that's changed. Another thing we do is they were monitoring customers' bank accounts where they'd analyze money come. So when someone would apply, they'd take a look at how much money was coming in now versus the beginning of the year. So if less money's coming in now, we can see less money coming into your bank account. That's a red flag. So I feel like, I don't know if it's going to get harder in the next 6 months. I think it's going to depend on if we have another shutdown or that sort of thing. But I think at this point, as long as the financials look good, I don't think it's going to get tougher. I think that the only way it gets tougher is if your business financials don't look as good, then it's obviously going to be harder. But if you're sustaining through right now and you're pivoting to the changes and adapting your business where you're not showing losses, then I don't think it'll be tougher for you. So it's a little relative, but we've already kind of came out and protected ourselves, and this is how we're going to stand back and, you know, mitigate some of the risk. So we've kind of already done that. So we've only kind of let up from there, where it's gotten a little bit easier on our end. Like I said, like not asking for the projections anymore and stuff like that. So we're starting to get a little bit more comfortable getting back into business as usual as far as lending is concerned.
Awesome. I did get a question here. What advice would you give brand new startup businesses to strengthen their business credits?
Okay. Yeah. And that's where it is. It's really tough. You know, you want to grow, but you don't have some of the credit products available to you. So definitely the most important thing, I think I mentioned before, is a business credit card. So really establishing some business credit there, that's going to help you with cash flow, using it for purchasing, you know, keeping some of that money in your checking account during the month where you're only having to make payments on that once a month. For us, I'm sorry, you can hear my dog drinking water in the background. I mean, that's really the best thing you can do. And like I mentioned, there's other lenders out there, and I have some partners outside of the bank that will, you know, like I said, lend if you have POs and stuff like that, or they'll lend on equipment. It's just going to cost more, you know, like rates for some of those non-traditional lenders are going to be more like 9 and 10%. But sometimes, you know, you have to do what you have to do to grow your business. But just like I said, just making sure you're using those things as short-term solutions and really thinking long-term, getting to a point where you're bankable, so you don't have to 3-4 years into business that you don't have to do those type of loans anymore, and you can get more attractive loans that way. You know, your margins are better and you're making more money. But yeah, definitely I would say a business credit card is a great place to start. Like I said, Chase, we've got great ones with 0% for the first 12 months, so that gives you some breathing room there, where if you have a big piece of equipment or something you need to buy, you're not paying interest on it for a year, which is great, and I know there's some other, I don't want to talk about competitors. There's some other credit cards out there that do the same sort of thing. So there's options there, but like, that's just really important. It's going to separate your personal, establish credit for the business, and then hopefully help you with cash flow as well.
Awesome. So I don't see any other questions coming in. We have a couple more minutes if anyone would like to ask any other questions, but any last minute thoughts that you want to share with everyone, Cherie, as we wrap up?
No, just thanks for your time. I appreciate it today. I hope it was helpful. I know credit's one of those weird things, like even on the personal side, no one really teaches it to you. You don't learn it in school. And a lot of times people find out the hard way, why it's so important. So, I just want business owners to kind of know what the options are, know what's important, and, just how to get your business to grow. Like I said, like all those times that people tell me my CPA is great, I don't pay any taxes. And it's like, that's not helping you. As much as we want hold on to every penny, especially in an economy right now, if you're in this for the long haul and you want your business to grow, just really make sure you're doing what you need to do to get yourself there, making sure that your business looks great on paper. And again, like I said, with the relationship, to me, the personal relationships with my clients are really important. So making sure you establish that, I think, not just using us when you need us, but, us getting to know your business, we can be a big asset for you and help you grow. We can be your advocate, with the underwriters and with other people. And if, we're invested in your business like you are, we see your passion, we're going to fight for it. And we're going to do what we can to get something approved that someone might have said, oh, no, we want to know you've been in business for 20 years or your family history and, all that's involved. All that stuff is equally as important as how you look on paper. We want to do businesses with people that we believe in and that are passionate about their businesses. That's important to us. So making sure that you have a relationship, I think, is, something people don't know. Oh, how do you, with everything going virtual, how do you establish a relationship, right? That is tough. Right now, our branches are open, our bankers are meeting with people, but like me, I'm by appointment only. You can tell I'm at home. I'm not in the office very much. And it's hard for me to speak to how it's done at other banks, but a big win for us at Chase. Like I said, I have assigned clients that I manage in my portfolio, but our small business specialists, so the bankers at Chase that have also been certified to help with businesses, we've started assigning clients to them. So although it's virtual and, at the end of the day, banking is changing, just like everyone else's businesses is changing, we've been changing for a long time too, where we know those millennials aren't probably going to come to the bank as much as the older clientele does and did, and that everything's done on your phone and virtual. So our bankers spend an hour every single day outbound phone calls. They have assigned clients just like I do. We've finally got the small business clients. Most of those are being assigned. So they're proactively spending an hour a day where they're reaching clients. And Chase is a big put, they're monitoring, they're making sure these bankers are calling, they're introducing themselves. So if you do bank with us and you get a phone call from someone and you answer it or you get the message, talk to them, call them back, have them get to know you, ask if you can meet with them. They're pretty much by appointment only because it's so busy, but take the time to meet with them so they know you. So I would say, it is going virtual and things are going that way. But even now, I used to be in person with my clients every 90 days at your business. Well, that's not really happening anymore, but I'm still calling my clients every 60 days. I am starting to meet people in person a little bit more. We're doing Zoom meetings as well too. So we love going to people's businesses. I think we're just being a little, we want to respect everybody's where they're at with COVID and how they feel about things. So, if a client invites me to come to their business, I'm still going to come, but am I going to show up and just without anyone inviting me? No, because we want to be respectful of what everyone's comfortable with. So I mean, those are things to keep in mind that, yeah, it is changing, but we still want the relationships. We still want to get to know you. And we're, at least on our end, we're trying to, reach out. And I know I have about 80 clients. Those small business specialists have about 400. They have a lot of people that they're trying to reach out to. So, if you do get those phone calls, just try to get to know them, even if it is just over the phone. I think it'll go a long way.
Very important and very, timely information that we received today. Appreciate your time, Sharif. And just wanted to thank JP Morgan Chase again, for the continued support of the chamber and our small business community here in the state. With that, I don't see any other questions, so we'll go ahead and wrap it up a little early. So again, we'll share the recording and Sharif's contact information in case anyone has any last minute questions. But on behalf of the chamber, thank you so much for this webinar this morning, and appreciate everyone coming in and tuning in. Thank you, and have a
Thanks,
great
you
rest of your
guys.
day.
You too.
Thank you, Sherry.
Hey, oh, hi, Karen. Thank you.
Thank you so much. We'll talk to you soon.
Yep. Awesome.
Safe travels, Sherry, to Vegas.
Thanks. Hopefully I will come back without losing any money.